with, we're just going to do kind of a high-level overview of small business taxes and kind of where you would start. I'm hoping that this will help you feel more comfortable going into your first meeting with a CPA or tax preparer. It's not meant to get really depth and in the woods. It's kind of just a higher level overview. Well, my first slide here, I'm going to skip over because we kind of went over that just a second ago. I guess I didn't tell you my hobbies outside of work. Some of that, I like watching basketball and live music and visiting the beach and trying new restaurants. So just a little more outside of the norm. Most people, if I tell them I'm an accountant, they're like, oh, I'm sorry. So I like to kind of give a little personality so that you realize that your accountant, I'm probably not what a lot of people think of as an accountant, or in my mind, what I wouldn't have thought of either. So I'll just kind of throw that in there for that reason. Okay, so kind of on the agenda for today, I want to talk about a few things that your CPA or tax preparer is probably going to request and want from you when doing your first initial tax meeting. So a high level of that is they're going to need some general business information from you, as well as they're going to need income, and they're also going to need the things, deductions. And I realize some of the deductions might be, you may not know right off what those are, but that's where we come in. We can ask for those. And that's my goal today, is to tell you what some of those things might be. In my experience with my own tax clients, it's not really a one size fits all. Different clients will have different needs. So you kind of just have to handle things on a client by client basis. So when I say general business information, what I'm really talking about there is I need to know a business name. If you have a federal ID number, you know what your legal business name is. If you have a doing business as name, types of business and industry that you're in. Like I mentioned a second ago, federal tax ID numbers, as well as their state tax ID numbers that come into play as well. I am a Kentucky CPA, so for Kentucky, there's a couple. There's a limited liability entity tax number that if you're an LLC, I would need that number. I can't speak for Ohio, but I'm sure that Ohio also has tax ID numbers at the state level that your CPA will need. I also will need to know a business tax structure. And then I probably am going to request previously filed tax returns. Okay, so kind of going a little more in depth on some of the things I just mentioned. The business legal name and doing business as. That is a requirement on the tax return. When I fill that in, I have to put what your name is. So I'm going to need to see that, or, going to need that information. I also need to know what industry you're in, because there's an NAICS code that has to be filled in on your tax return, and it tells the IRS what industry this return is for. So there's just a few examples when I think of a small business of retail, restaurant, rental, construction, cleaning, medical, hair salon sales, and really that list can go on and on. And in my area, farm is also another one that I think fits into this category too. And I need to know industries, because if it's a rental industry or a rental business, it's going to go on a different schedule than if it's, say, just a restaurant. And if it's a farm, there's a different schedule for that. So that's, kind of a easy example of why that I need to know that. Okay, getting into the business tax structures. There are 4 different types of tax structures that your business can be, and this applies to small business. I think a lot of times people, when they think of a small business, their mind instantly goes to this first category, the sole proprietorship and Schedule C, which that really is probably what a lot of most small businesses are. So the remainder of this presentation, I will focus more on that category. But a small business can be any of the 4 of these categories. It can be a partnership. It can be an S corporation or a C corporation. But we do need to know when you have your first tax meeting with someone, we need to know which of the 4 categories of this that you are, because that's going to drive what tax return is prepared for you. So the sole proprietorship, that goes on your personal tax return, your personal 1040. And if it's just a regular business, like some of the ones I mentioned, like a restaurant, retail, basically anything except for rental or a farm, it's going to go on the Schedule C. If it's a rental business, it's going to go on an E. And if it's a farm, it's going to go on the Schedule F. Now, that doesn't really mean a lot to you, but it does to me. And I know that there's some different specialized things that I may need for the rental or the farm. Whenever we do our first meeting with someone, if you have a federal tax ID number, I need the number, but I always ask to see that letter that you get from the IRS. And the reason I do that is that form will tell me which of these 4 categories you fall into. And I've had several clients that if they have applied for the federal ID number themselves, they could have accidentally selected a different category than what they meant to, and they may not even realize they might have signed themselves up to be a partnership with the IRS and had no intentions to do so whatsoever. So I like to ask for that just because I need to know which return that I need to prepare and what the deadline for that is. Now, with that being said, so a sole proprietorship on the personal return, that is due the same time the personal return is, at April 15th is typically the deadline. The last few years, it's got extended with COVID. And then if that falls on a weekend or a holiday, it gets extended to the next business day. Partnerships are due by March 15th. So the theory, well, actually partnerships and S corporations both are due by March 15th. And the reason for that is they are due a month earlier because those two entities issue what's called a K-1 form that flows to a personal tax return. So those have to be done first in order to pass to each partner for them to do their personal tax return. C corporations, they are due April 15th as well, or sometimes a C corporation can have what's called a fiscal year end, where they can really have any end of year date that it's set whenever they sign up to be a C corporation. I've got on this slide, you can see a partnership is prepared on a form 1065, an S corporation is on an 1120S, and a C corporation is on an 1120. Now, like I said, the rest of this presentation, I'm going to focus more on the sole proprietorship just because I kind of feel like it's probably going to encompass the most people. But then at the same time, some of the partnerships and corporations, there's a little bit more technical things that you get into with those. And I don't know that we would have time to talk about all of that in and out. Okay, so the next thing after I know your tax structure is I am more than likely, or any preparer for that matter, is probably going to ask you if there's previous business tax returns. I need to see those. Sometimes one previous year will be enough, and sometimes I'll ask for several previous years. And we really need to see those for a few things or a few reasons. If you have assets that are on there to be depreciated, I need to see the depreciation schedule because I need to know what prior depreciation has been taken, and I need to make sure that I have that set up going forward in line with how it was set up originally when the asset was put into service. Then I like to compare the information from a previous year. So I like to see if you've had an expense in the previous year that you didn't tell me about this year. Or I also, because a lot of times if you forget something, then I'll see that you had it last year and I might say, okay, well, you had this last year. Why don't we have this year? And then that can keep you from leaving an expense off that maybe you forgot about. But then I also like to see it too, because if I don't agree with how something was done, and it needs to be amended, then we can talk about that and decide if that's going to be the best option for you to do. Okay, so the next category is income, and this is a big one. I really just got one slide to talk about it, and it's kind of, I feel like it seems sort of like a no-brainer, but the tax preparer CPA is going to need to know what income that your business took in. We need to know if you took it in by cash, check, card, and you'll notice I have PayPal, Venmo, Apple Pay, Bitcoin, and Cash App, all of this stuff on here now. We're starting to get into, a lot of people I think felt like when they dealt in Bitcoin and things like that maybe the IRS didn't know about it, didn't see it, but virtual currency is something that is required to be put on your tax return. And so that's kind of why I wanted to throw that on there. It's fairly new. I don't see a lot of clients at this point that get paid in anything like that, but I am sort of located in a mildly rural area, so that could probably be why that I don't see that too much, but it still is something that is required to be turned in. So to support these, we would need to see if anybody had issued your business any 1099s, which a 1099, if you're not familiar, is basically just a tax document that you would get issued if you were paid over $600 right now by an entity for services rendered. If you have a receipt book, I would want to see that. Bank statements for the business, I would want to see those. And then, of course, if you actually prepare financial statements, well, I should have probably said income statement first, because if you prepare financial statements, that's going to be where I would start. But all of those other things are definitely probably going to be asked for. I can't promise or guarantee that the person you go to would ask for those, but I know myself personally, I like seeing all of the information and then kind of weeding through and deciding what I need to use and what I don't. One thing, a couple of things actually with income I want to mention here. It may sort of seem like a no-brainer to some people, but if you don't have a separate business bank account for your business, that can really create a lot of confusion and headache for both you and the CPA during tax time. So to maintain really good records, it's always best that you set up a separate business account to keep up with your business expenses and income. And another thing to kind of keep in mind too is, your record keeping is really important in this matter, because if you go in at tax time and you basically hand an accountant receipts and it's not structured or anything like that, more than likely you're probably going to end up getting charged more, because they're going to actually have to do a full year of accounting services for you in addition to prepare the tax return. So the next topic is deductions. So what I've got up here on the screen right now is basically just the IRS's definition of what a deduction is. So the IRS publication 535 states to be a deductible business expense must be both necessary or ordinary and necessary. An ordinary expense is one that is common and accepted in your industry. A necessary expense is one that is helpful and appropriate for your trade or business. So our job as your tax preparer is basically to take that definition as well as several other rules and help you decide if your deductions will meet that definition. And really, for the most part, within reason, if you can justify why that you're using the deduction for your business deductions are pretty broad. I've only had some rare cases come up where people have asked me about expenses and I've had to say, absolutely not. There's no way you could justify that. But like I said, most of the time, if you have a reasonable need for what you're buying and can say, this is why I need this, then you're usually pretty good on deductions. So this form is it's a copy of a blank Schedule C that I talked about. This would go on a personal 1040 tax return, and this is what a sole proprietor's tax form basically is. So if you're a sole proprietor, single member LLC, or even if you're not an LLC, if you're just a sole proprietor, this would be what your business tax return looks like. And so rather than to list out all of those deductions individually, I thought sharing this with you may be more helpful, because you can kind of see it's under Part 2 expenses. There's all the expense categories listed there of what can be claimed as deductions against your business income. And then down at the very bottom on 27A, there's even other expenses. So if you have an expense that doesn't necessarily fit great into one of these categories, but it's definitely deductible and a valid expense, it can go under other. They have no problem with that whatsoever. So I'm going to leave this kind of up here just for a minute. So like my other bullet point mentions, this is the Schedule C. I don't have a copy of the Schedule F for a farm or the Schedule E for rental property up here. But typically, I mean, the expenses are very similar. The farm goes into a little more detail with some categories that you would see maybe more for just a farm. Like it goes into fertilizer, lime, fuel. I mean, it breaks things down maybe a little more specific for that industry. And then rental, it's kind of general like this as well. But that is basically what your accountant is going to be putting your expenses into. Now, one thing I would say is if you're keeping up with your receipts and everything, I always try to tell clients this. I have clients that have brought me stuff in folders totaled by month, added up by month. And I've had people bring them in completely totaled and not broken down by this category. And while that's great, I hate that they spent the time doing that, because I basically have to take that apart and redo it. So if you're going to try to help the accountant and do some of this to keep them from having to re-add or, look at this like that, it's better if you can kind of keep your receipts and everything in these categories. And that's just something, kind of a side note that I wanted to mention, because like I said, I hate for anyone to feel like they're helping and really want to help, but then they've wasted their time, and then I'm still going to have to re-add everything and regroup it how I need it. So basically what I mean is, yes, if you have receipts, it's better if you've got stuff for repairs, put those together, add those up. If you have supplies, put those together, add those up. And I mean, if you don't know what category they go into, that's fine. A CPA or tax preparer can help you with that too. And I'm only suggesting that you could put this stuff together like this. I have people bring me a tote full of receipts in no shape or order, just thrown in the order they've got it. And then I go through and have to add those up and put those in categories like this. And that's fine too. That's part of my job as well. So any way that you choose to do it is fine, because I understand that running a business, you may not have time to do all of the, accounting type work. And again, that's why you pay somebody else to do that for you. Okay, so with expenses, there's a couple on this sheet that I want to go into a little bit more in depth, because they have a little bit more to them than typically just your, okay, here's a receipt, let's deduct this. So let's see, the first one I'll start with is the auto expense. So with a sole proprietor Schedule C, the automobile expense can be handled a couple different ways. Probably the easiest way is to track mileage. So if you are doing business, doing something for your business, if you're delivering, if you're going to the bank, if you're going to buy supplies, whatever you're doing that is for the business, you can track your mileage and then turn just your mileage into your tax preparer, and we will calculate how many miles you drove based on the federal mileage rate, and you'll get a deduction for that. Now, the IRS, what you'd be required to have is a mileage log. So it would need to have a date. It would need to say where you went to, how many miles, and what the business purpose was. You can do the mileage, or if you prefer to do actual expenses and receipts, you can do that as well. So with actual expenses, you would have like your gasoline, your repairs, any of your other, actual expenses. A lot of my clients choose to do the mileage because the deduction a lot of times ends up being a better deduction for them, and the record keeping is a lot easier. They don't have to keep up with every single gas receipt that they have. And I don't know about you, but I've had several receipts over time that fade out. So if you're keeping all of that, honestly, it's not a bad idea to have copies of them just in case, because 5 years down the road, if you were to be audited and all of your receipts have faded out, then there you've kept those and they may not be worth anything to you. So that's the first one. And that's why I wanted to kind of look at that one, because as you can see, it's not just cut and dry one thing. You've got a couple options there. And that's also something that I feel like you have to work with your tax preparer to determine what's better for you. Because I find a lot of people will talk to their friends or colleagues and they try to compare themselves tax-wise to each other. And really, you can't do that because you don't fully know somebody else's tax situation. And honestly, what's better for one person may not be better for another person. So that's something you've kind of got to look at. The next category is depreciation. So when I say depreciation, that is something that we, the tax preparer, will calculate for you. But what we do with that is a fixed asset you buy for your business, which could be anything like it could be building, equipment, furniture. It can even be a vehicle. Basically, anything you buy over $500, then that really is supposed to be set up and depreciated over what's called a useful life, rather than to just be totally expensed in 1 year. So with depreciation, we need to know when you bought something, how much you paid for it, and then I also need to even know for small business purposes if it's fully business use. Sometimes people buy stuff and they use it half personally, and sometimes they use it for just half business. So that's kind of what I mean there. And then useful lives vary based on what the asset is. Equipment, it depends. 7 years is kind of the general catch-all. So if something doesn't fit into a different category, 7 years. When you get into like commercial buildings, things bigger of that nature, it's more around 39 years. And then if it's a residential rental, 27 and a half. Vehicles are typically 5 years, but they can vary a little bit. And so when I say those useful lives, what I'm saying that instead of writing the full expense off in 1 year, you would spread that, you would divide it over the number of years the useful life is. Now, there's also some things that you can do. You can actually take bonus depreciation or 179 depreciation. What that means is if you need to take more of that expense in a given year for some of these asset categories, you can do that. So if you're showing a huge profit and you really need to take that expense more in a given year, you can. Now, you can't do that for all asset types. Definitely like your buildings and things like that, you cannot do that. But generally, everything else you can. There are some more specialized rules around vehicles sometimes. But again, that's something you can kind of look at with your preparer. And the thing about doing a tax presentation like this is what I say today, I mean, it's not going to change as quick as tomorrow, but 2 or 3 years down the road, different presidential administration, there can be changes to any of these rules. So that's why for planning purposes, you kind of need to work with somebody. Okay, so on past depreciation, I think I've got everything there that I was going to say. The next category is interest. I like to mention this because I feel like it kind of goes hand in hand sometimes with the depreciation. I have a lot of clients, if they say have financed a building or something, they'll come in and they will think that we're going to write those payments off every month that they're making on this loan. And that is not how we handle that. We would take two things here together. I would need the total paid for something, and it would be set up on depreciation. But when you're financing something, you're going to have another expense come into play there. You're going to have bank interest. So if you financed a business asset, or anything, actually it don't even have to be an asset. It can be if you just had to take out a loan to get capital to start your business. If your business is paying interest, then we can deduct that. Now, a lot of times with interest, you will get a statement from the bank telling you what you have paid in interest. And that's generally what I would need to see when I'm doing a tax return. But I have had people have to contact their bank and just get the total interest paid on the loan, and that's fine too. Let's see. Oh, one thing I want to back up just a minute. I'm sorry to do this, but I was going to mention kind of putting auto and depreciation together there for a minute. Depreciating, you can depreciate a vehicle, but a lot of times clients end up not depreciating a vehicle because if you depreciate the vehicle, then you have to do the actual expenses like I talked about, where you keep all of your receipts and things. But if you do mileage, while you don't get that deduction for depreciating the vehicle, but you think if you're in an industry where you're driving a lot and putting a lot of miles on something, your mileage expense over 5 or 6 years could very well end up being a better deduction for you than actually depreciating that vehicle out. So I had actually meant to bring that topic up, and I apologize for having to back up and go back. So let's get forward here to the last category there, business meals. And that's what I'm sorry to bring up food as close to lunchtime. So I know that's usually one of my most important times of the day is lunch and what I'm having for lunch. But business meals it's not just your straightforward deduction like some of the other ones either. Basically, if it's a business meal, it needs to have a business purpose. So you need to either be taking a client out for a meeting, and you're going to be discussing something, or you need to be paying for, say, your employees to have lunch or dinner or something to that effect. But I've had clients before that will bring me a box of receipts, and it's their personal lunch. That's not a business deduction, even if you're working. Now, if you are buying, say, someone who works for you lunch or dinner, then that is a different situation. But you can't just write off your personal meals and say that's a business expense. I've even had people before go on vacation and, try to turn some of that stuff in. Now, I will say, if you're going to, say, like a continuing education for your professional industry, or if you do have a business purpose for where you're going travel wise, then in that case, the business meal is acceptable, and it's the travel and everything would be. Business meals, a good thing to keep in mind is it's only 50% deductible. So in other words, if you spend $200 on business meals, then $100 is the expense you're going to expect to see when their taxes are filed. Now, one exception to that, in the last couple of years, the IRS, they actually allowed, if a business meal was bought in a restaurant, they actually allowed you to deduct the full thing. And they did that to kind of, I think, stimulate people getting back out there and supporting restaurants. So occasionally, like with COVID, where that it was closed down, occasionally they will do that. They will do things to try to promote, to get people back out there. Personally, another example they did during COVID like that was they let people deduct a $300 charitable contribution if they didn't itemize on their personal taxes. And that's something that's, both of those things have went away now, but they were something they did to try to stimulate for COVID. I don't have travel on here as a special category, but we'll go ahead and mention with it a little bit. If you go somewhere, like I've had, for example, like a clothing retail, like a boutique store or something, if you go somewhere for like a trade show or something to that effect, then at that point, when you're staying away from home, your travel expense, your motel, your meals, that would all be deductible items. I mean, so those are all things to kind of keep in mind. I probably should have put travel on here, but it's not really, you don't see it a whole lot, but it's definitely a good one to keep in mind, especially if you have an industry where there is quite a bit of travel that comes into play for that. So with that, I'll kind of just conclude and say, everything I've talked about has been kind of, I hope, a higher level of everything. But then I also hope that this information would help you feel a little bit more prepared going into a tax meeting, and maybe you wouldn't feel as blind or lost about what you need to take. Also, your first meeting you ever go to, expect a lot of questions. I don't like people to come into my office and feel like that I'm asking questions to be nosy, or sometimes, I mean, some of the stuff we have to ask, it honestly, now, business wise, maybe not so much as just a personal tax return, it may feel like that we're being a little nosy, but I assure you, we ask these questions to ensure that what we're doing for you is correct, as well as that we're doing the best job possible that we can for you. Because I need to understand what you're doing and what you think you're doing, and to make sure we're doing it right and to do it to benefit and help you the best that it can. And I also ask because I don't want to leave anything off. I mean, I've had clients before that someone told them something wasn't deductible, so they just assume it's not. And, you got to keep in mind, a lot of times people think they know things, and just because they've seen it on Google, it may not ring true to everybody. So that's just kind of a thing I like to say. I've had people come to me before that they've told me their last tax preparer didn't ask questions. That's concerning to me. I feel like that there definitely should be questions up front. Now, if you've been with somebody 10, 15 years, even 5, 7 years, if your stuff kind of stays the same, you're probably not going to have to answer as many questions the longer you stay with somebody. But up front and at the beginning, there should be questions. And the same goes for the client. I mean, I expect a client to have questions, and I try to answer, and I want to be able to answer any question because I don't want anybody to ever leave my office feeling completely confused. So that kind of concludes, and I will say it looks like I went a little shorter than what I probably was scheduled for, but I know if you're anything like me and doing continuing educations, I'm usually not too disappointed if it does run a little shorter. But so I basically, I will mention up on the screen is my email, my office phone number. And again, I'm located in Kentucky. My office is in Morehead, Kentucky. And I'll just throw this out there. If anybody is looking for someone and would like to book a tax appointment with me or another CPA in the office in the upcoming year, I'll offer a 20% discount if you mention that you watched this. And we like working with small business, and I feel like we're very easy to get a hold of, very approachable, and we try to really be a partner with our clients. I've had clients come to me that tell me they can't get a hold of their accountant. That is really not what our office tries to be about. So I guess at this point, I can kind of turn it back over yeah, I'll see what questions we've got and try to answer a few of those.